Hello, everybody, and welcome to Commodity Culture, where our goal is to make you a better investor in the commodity space. My name is Jesse Day. Before we dive in, standard disclaimer, nothing here is investment advice. Do your own due diligence. And today's guest is the CEO of Stallion Uranium, a company working to fuel the future with uranium through the exploration of over 3,000 square kilometers in the Athabasca Basin. It's Drew Zimmerman. Great to have you back on the show.
Jesse, thanks for having me back on and love the opportunity to chat with you.
Yes, I'm grateful as well. And I do want to start with big news in the uranium sector at the moment, which is that the ban of Russian sourced uranium in the US is now official. And in addition to that, the US is going to start a $3.4 billion buy-up of domestic nuclear fuel. This is certainly a fascinating development. There was initially announced that there's going to be a 90-day waiver that some of these companies can apply for. And then a Russian company that supplies uranium came back and said, actually, you only have 60 days and kind of a countermeasure. So it'll be interesting to see how that geopolitical game plays out. But I'm wondering what your initial thoughts are on both the ban itself and the buy-up of domestic nuclear fuel, the money that's been allocated there.
Yeah, I mean, it's a very significant just because of the size. I mean, right now, the United States, the world's biggest consumer of nuclear fuel, gets 25% of their nuclear fuel from Russia. So, a considerable impact to the US energy markets. But I think what you said, it's the geopolitical games. It's this further bifurcation of the uranium market where you have, the Kazakhs with, 45% of the uranium supply that a lot of that flows through Russia for being turned into nuclear fuel, and if that's going to get segmented away from Western buyers, that has a considerable impact. When you look back at the United States through the 70s and into the 90s, a huge nuclear build out there, and now we have, starting from scratch again. So it was important because it did also unlock, 200 or $2.7 billion worth of funds for, building out that nuclear fuel supply. And then now the 3.4 billion of nuclear fuel that they want to buy. So again, very, very considerable when it comes to, restarting. And again, when governments sort of get behind something and start going and going in this sort of size, it's going to have a very meaningful impact. And I think that's probably the most important thing to take away from this is, the further bifurcation of the uranium market, where this onshoring or friendshoring is going to take place. And the fact that the government's saying, we need to build out this industry again that was all but forgotten in the United States. And that build out's going to, take some time, but have, significant impacts for those that are, supplying into it and or utilizing it. And again, when it comes to geopolitical games, like you say, there was a 90-day waiver, and then it went to 60 days when 10X said, yes, you have to tell us right away. And there's the potential, even if a waiver happens, Putin tells 10X, no, you're not selling uranium to the United States anymore. So again, there's a lot of what could be very sharp implications for supply of nuclear fuel. And again, that's why the United States, I think, is starting to push in such a big way to have some sovereignty over their nuclear fuel supply chain. So very big implications. And again, on a grand scale, just because how important the sort of Russia-Kazakh nuclear fuel supply is.
Yeah, and it'll be interesting to see which way Kazakhstan does go. Obviously, China would love to have access to the vast majority of that uranium. We'll see how that proceeds in terms of Kazakhstan getting sanctioned or Russia telling them, hey, look, you also cannot sell uranium to the West. Very interesting. And we're also starting to see some mainstream attention. URA ETF was featured on CNBC following the Russian ban, which was cool to see because we rarely see that. We live in an echo chamber of uranium investors on Twitter for the most part, and it's rare to see our favorite commodity featured on the mainstream press. Do you think? How long do you think it will be before the generalist audience kind of catches on, your average retail investor? And we've seen some institutional interest already, but nowhere near the level that I think uranium has potential for. How do you see institutions perhaps playing a role moving forward with the uranium market?
Yeah, I mean, great to see URA get that attention. I mean, Friday was the single largest volume trading day for URA yet, which is great because that does tell you that we are starting to see that generalist investor and the institutional investors come to the space. I think URA is a good barometer for that because, again, if you were starting to learn about the uranium market and the underlying fundamental story of why you want to be a uranium investor, the ETF is sort of a balanced way to put your toe in the water, and I think that's what we're starting to see with the volumes in URA. It owns the biggest uranium companies in the world, but I think also important to realize the URA has a AUM of about $3 billion. Now, just for direct comparison, when you're looking at GLD, sort of again the easy way to buy a lot of gold companies, it's got an AUM of about $62 billion. So you're 20 times the size of institutional and generalists playing gold companies than they are in the uranium sector. Yet uranium is going to be and continuing to becoming more prominent and important for global energy supplies as we move forward. So I think as that narrative and understanding gets built in, the market capitalization of the uranium industry in general has the potential to increase dramatically. And I think that's going to be the exciting thing that comes to the space is, prices can move a lot just because it is so small. And in order to get up to that heightened capital levels of AUM, of interest, of, more position size, you're going to have to see prices go up a lot. Anytime you try and pour water into a small bucket, it overflows, very quickly. So that bucket needs to get bigger and bigger to hold more water. And I think that's what we're starting to see. The first run up that, peaked out at about 106 on spot uranium at the beginning of this year, backed off and now is starting to build. As that happens, the reset and sort of that bucket gets bigger. And I think that's, a great thing for the industry. But again, I think still at this point, at this size, there's a lot of price appreciation that can come sort of across the specter as more capital comes to the area, as people understand that, this is going to be a long-term fundamental thesis that you're investing in.
Let's talk about jurisdictional risk for a moment, because we've seen uranium companies in Niger have their share prices slashed by the coup and the political turmoil in that country. Things do appear to be stabilizing, though, notably, news coming out of Global Atomic that they've met with the government there and that it's going to be business as usual. However, nobody knows exactly what's going to happen. How do you view the situation in Niger at present? Is this an uninvestable jurisdiction? Do you think it'll be business as usual in a country known for these kinds of disruptions?
No, I definitely do not think it's uninvestable. I think every project and every country has its own ups and downs. I mean, there's some great projects there, as you mentioned, the DASA project, Global Atomic. But again, it's an investment. So there's risk and reward, and if there's going to be more risk, the reward has to be that much higher. And I think that's what we're seeing with share prices lower. That entry point offers more reward, more upside. But I do think it's going to remain a risk, and because of that, you're going to trade it at a discount. There's a reason why Cameco, for example, trades at a higher multiple than Kazatomprom. When anytime there's geopolitical risk, especially if it's something as sudden as a coup, even if things build up, that's sort of always sort of hanging over your shoulder as an investor of, okay, does my investment automatically get cut in half on news that comes out while I'm sleeping? So that's a risk that's always going to be there. But again, the risk is then compensated by upside in the reward of these are great projects that have great fundamental numbers behind them, that if they come to producing and are able to sell that uranium, that would be a tremendous reward for the investor. So I don't think it's going to be uninvestable. I think it makes it a little bit harder for those projects to come online because access to capital will be a little bit trickier than it would be otherwise. But again, could be some absolute great rewards for shareholders that are willing to take that risk. And if the operations or projects come into production, then that'd be a great place to be.
I think that was an excellent breakdown. And I also think position sizing becomes important with these sort of higher risk stocks that are operating in jurisdictions that could have these sorts of disruptions. I think a lot of the trouble that people run into is that they put too much capital into the riskier bets that have the higher upside, when really you should probably be putting smaller amounts of capital because of the higher amount of risk and reward. That's just my opinion, but I think perhaps at the moment, Global Atomic presents more risk than at least it did before the coup, as well as the other uranium stocks in the Niger region. I do want to shift to the Netherlands, though. Some great news coming out there is the new government has expanded their originally planned nuclear reactor build-out from 2 to 4 nuclear power plants. You know, people look at this and they say, yeah, that's going to be years out. It doesn't affect the uranium supply demand fundamentals right now. But that's not the important part. The important part is how the zeitgeist is changing and how the perception of nuclear energy and how favorable it's becoming around the world is just getting better and better. I feel like this nuclear renaissance is absolutely in full swing. It just cannot be denied anymore. There's no one, you know, you've got Germany and Australia as these bizarre outliers as the rest of the world moves towards nuclear. I wonder what your thoughts are. Is this nuclear renaissance in full swing? How do you see that?
I absolutely agree with you. I mean, it seems like, week in, week out, we're getting, contract or life extensions of different reactors. We're getting, bigger build outs of existing sites. I mean, in the headlines again in the last few weeks here was Italy saying, within 10 years, they're going to move towards nuclear power. I mean, they haven't had nuclear power generated in that country in the last 24 years. So you are seeing more and more governments around the world. I mean, I think it really got signified in a big way with COP28 last year, with 22 countries saying they were going to triple nuclear capacity. And then they've followed through. We've just continued to see more momentum on the back of that. And that's, the way that I look at this is governments are not small, nimble organizations that are, known to be able to move quickly with, market reactions. They are, these big boats in the water that, take time to turn. And then once they turn, to be able to power up, take a lot of time and energy. But, we've seen, what governments, to stay with that metaphor, around the world sort of make that U-turn on nuclear power and are now with these policies, revving up to get to speed. And when you've got governments around the world, putting hundreds of millions and billions of dollars behind the nuclear industry, I mean, as investors, we always hear, a rising tide lifts all boats. And, I don't think I've seen a market that epitomizes a rising tide more than this uranium market. I mean, we're seeing it across the space, whether it's, governments everywhere sort of extending reactor life, new build outs coming, the AI data center revolution and the ability to potentially co-locate SMRs for even more blue sky potential on the demand side. And then, as we talked at the top, the geopolitical issues on the supply side and supply constraints, even just from, regular mining operations that aren't able to ramp up as quickly as we might want to be able to meet this demand. So it really is a rising tide in the uranium market, with governments, backing it with billions of dollars. And that's where I think, we can say it's a full blown renaissance again in the nuclear space that's going to last for decades, because governments don't take this kind of action to be there for a year or two. They want a multi-decade buildup. And I think that's what we're just at the beginning of.
Yes, I absolutely agree as well. I'm wondering, you have your ear to the streets in the uranium sector more than most, being the CEO of Stallion Uranium. Is there anything you're hearing when it comes to supply demand dynamics, long-term contracting terms, spot market availability, any info out there that you think would be valuable for investors to hear?
Well, given that Stallion is a exploration company, let me tell you, if I started getting phone calls about potential pounds in the ground that would definitely be an earmark of where the industry is at. And, we haven't quite hit that level yet where, I don't have Constellation giving me a phone call at the moment. But no, I mean, definitely, attuned to the space, obviously, and following these headlines, because, again, it does give you confidence that, this isn't a, flash in the pan, run up type of market. It's a market that continues to build on fundamentals that just get better and better and better. So again, being able to travel a lot and be able to talk to investors around the world of what they're seeing, what they see in their governments from different countries around the world. It's becoming all the sort of same feedback that this is growing. This is going to become more mainstream. It's going to get bigger, and it's going to be here to last. So that again just allows us to have confidence, because again, we're at the very early stages, that early pipeline of getting uranium into the fuel cycle. That's just more confidence that we can go out and do the work that we want to do, because we know the demand is going to be there, not just for the next 1 or 2 years. It's going to be there for the next couple of decades. And we need the pounds to be found in order for this nuclear renaissance to be able to continue. So again, for us, it's just the confidence that we have in all those discussions that we have. But I will let you know if I ever have a direct reach out, because that might signal a little bit of frothiness in the near term, but not there yet, that's for sure.
Great. Well, I think that's a perfect segue to discussing Stallion. You put out a press release on May 7th on the completion of your winter 2024 drill program at the Coffer project. Walk us through those results.
Yeah, Jesse, I mean, these were as good a results as we could have ever hoped for a maiden drill program. Again, large land package, but untested. So the first time that drill holes have ever been done on our project. And all 3 drill holes hit anomalous radioactivity at or just above the unconformity. So where this project is, we're going to be looking for an unconformity style deposit. So in the Athabasca Basin, you have sandstone and then the basement rocks, and the meeting is the unconformity. And that's where we'll be targeting a deposit. But the most important thing that we found on this program was on our final hole, hole number 3, we intersected a large graphitic structure. So that's sort of the plumbing of these uranium deposits in the Athabasca Basin. And we found ours 160 meters below the unconformity. So it sort of slopes up into the unconformity. And we want to just be able to trace that up towards the unconformity. And that's where we think the potential to have our deposit is. And again, our confidence in that is from the fact that we had anomalous radioactivity in all 3 drill holes, showing that there's probably halo effects of something bigger that's there. And the other key piece for us is we're just 13 kilometers to the east of Shea Creek, which is Orano and Uranium Energy Company's Shea Creek deposit, 100 million pounds in the ground there. So we're doing a lot of work right now to analog everything that we've learned in this drill program to those deposits. And for us right now, I mean, so much of it is looking similar look to the structure. The alteration that we're seeing in the just above the unconformity is very similar. And the good thing for us is the size of the structure that we have. So at the depth that we intersected it, our structure is actually 5 to 15 meters larger than the Shea Creek structure at that same level of depth. So the potential to have a large deposit is definitely there. We've checked the boxes that we know the area and the structure is fertile. So again, now that we know exactly where the structure is, having a very high confidence of being able to follow that structure up towards the unconformity is where we are. So again, the amount of information learned from this drill program and the technical success that we had was absolutely game changing for Stallion, and greatly increasing the probability of that very important discovery hole with a follow-up drill program.
So now that you have these results from Coffer, give us a timeline for the follow-up drill program, and any color you could also provide on plans for your other properties as well.
Yeah, absolutely. With Coffer and the Appaloosa target, it is definitely something that dictates a follow-up, because like I say, I think with a few more holes and potentially the next hole, with the confidence we have and the information that we have, we think we could make a discovery with that follow-up drill program. And, in the Athabasca Basin, we know what a discovery hole can do for a company. I mean, most recently, our partner F3 Uranium discovery hole at the end of 2022 went from a 20 million market cap to 150 in a couple of weeks because of the value of what we're looking for. I mean, we are looking for a multi-billion-dollar deposit. So for a small company to be able to have that kind of win is a pretty significant and immediate re-rate. So we're putting together the information, like I said, from the drill program and working a lot with the data that we have from Shea Creek to be able to, best target and have the best probability for that upcoming drill program. As it goes right now, we're looking to be able to get back to that target area when things start to freeze over. So that'll be, the sort of fall time period for us. But the other important thing for us, again, we had 3,000 square kilometers, a huge land package in the Southwest Basin where we're the biggest landholders. And we have, 5 or 6 other key targets. And, we think this initial success has proven our strategy works. So, we did big regional surveys. And then by taking, the best 1% of the land that has, the best targets on it, putting your drills in locations that have the highest probability of discovery success is what we're going to do and what we think the Appaloosa success proves. So we also have, 5 or 6 other key target areas in the Western Basin that we want to bring up towards drill readiness, because our big sort of standout strategy from the beginning was we think the Western Basin is just as endowed in uranium as the Eastern Basin is. The Eastern Basin has just seen 50 years of exploration, thousands and thousands of drill holes, where the Western side has not had that. And if that's the case, given our scale and given the land package that we have and the targets that we've uncovered, we think we have the potential to host, multiple tier 1 world-class discoveries. And again, have, just followed a systematic strategy to be able to find those and be able to make those discoveries. So very excited about the other potential target areas that we have, but obviously front and center for us would be following up Appaloosa, because that discovery could be right around the corner.
And what is the ultimate goal for Stallion with your uranium projects? Are you looking to get bought out by a bigger player in the basin? Do you ultimately plan to try to bring one or more of these projects into production yourselves? And in either scenario, could you outline your strategy to reach that end goal?
Yeah, for us, I mean, we think the value is in that exploration success, being able to have a discovery hole and drill that into a deposit with a maiden resource. I think there's a lot of dynamics. One, everything that we talked about in the fundamental sort of uranium space, meaning that those pounds that need to come on the market will be worth quite a bit, even if they're in the ground still. The other dynamic that we have in the Southwest Basin, as it stands right now, there's plans for 2 mills to be built with both Fission and NextGen. Both have, their key deposits that would feed those mills for the first number of years. But past that, there needs to be more pounds found to feed into those mill, whether it's 1 or 2 in the Southwest Basin, as we go into the future. And again, if you want to be feeding that mill 10 years from now, you need to be finding those discoveries or those deposits in the very near future. So that's what we're working to do. So with those dynamics and with the group that is behind Stallion, again, this is the group that put together and found the Rough Rider deposit with Hathor Exploration, and then had a sale to Rio Tinto for $650 million in 2012. That big group behind us is looking to do that same sort of thing. We think the same fundamental sort of drivers are in play, or actually even better fundamental drivers are in play, obviously. And that sort of strategy is where we think we can create a significant amount of value for our shareholders without having to go into the development stage of the asset. So for us, it's going to be, again, making sure that we can have that discovery, move it towards a maiden resource. And at that time, we think there's going to be multiple players that would be looking to have pounds added to their balance sheets, given that they have the production capability.
Yeah, that makes perfect sense. And you are focused on uranium, but you also have some gold assets as well, with the price of gold being where it's at. I think it's worth discussing these properties. Talk to us about Stallion's gold projects and what your plans are for them.
Absolutely. Stallion started as a gold company before we made the big pivot into the uranium space, and largely have held the gold assets in our back pocket. Sort of, I've been saying, it's sort of an ace up my sleeve to have two great gold assets. But it was always about making sure there was catalysts coming that could see a lot of value come to those gold assets, and I mean through the first part of this year, that's sort of happened in spades, both with gold prices hitting new all-time highs sort of over and over again, well above $2,400 an ounce now. But specifically to the projects, and our key project, our Horse Heaven project in central Idaho, right next to Perpetua Resources, they've started to really hit their stride in bringing online what will be one of the largest independent open pit gold mines in the United States, but also a critical supplier of antimony, a critical mineral in the U.S. with no production. So they've seen, Franco-Nevada sign an $8.5 million silver royalty. They've seen over about $60 million of Department of Defense grants for their production and processing of antimony, another big step. And then one of the big moves they saw about a month ago was the U.S. Export-Import Bank give them a $1.8 billion letter of intent for project financing to be able to bring that project forward. So with their record of decision expected from the U.S. Forest Service in the next couple of months, significant further catalysts to come to the Perpetua Resources Stibnite project. And with us right next door to that, we think, now is the time to really start to realize some value as that project moves ahead. And I mean, Perpetua's share price has doubled this year on the back of that. I think that's just, further proof that that project is really picking up momentum. So, over the last couple of months, we've continued to have conversations with different groups and different structures, being able to see the gold projects get advanced. Because right now we think, in the Stallion structure, they're not getting any value. So being able to provide value for our shareholders with a structure that sees those projects get advanced, with all the catalysts that we're seeing both in the gold space and specific to each project, we think there's a lot of value that can come, and like I say, not getting any value for right now. So continuing to have those conversations and hoping to be able to come to the market sooner than later with some results on that again will be able to show some shareholder value, because the time definitely seems to be now to make a move. A lot of catalysts happening for both those projects.
Great. Well, Drew, fantastic conversation. I'm obviously going to put links to Stallion Uranium's website as well as social media so people can learn more about the company. Do you have any final words about the company before I let you go? Things you maybe think investors should be paying attention to?
Yeah, I think as you look at the uranium market right now, I hope that if you made it to this part of the interview, the area has definitely piqued your interest, because there is just so much going for it right now. And if you look at the market, you're seeing the producers and the developers, trading at all-time highs, and we are seeing a bit of a chasm, a lack of confidence down to the junior miners. But when you're looking at the junior explorers like Stallion, I think there's going to be a tremendous amount of value that can come as that space starts to get some attention. And I think if you look at the companies that are doing great work, and if you go and dig into the work that we've done here and described here, I think we are a great home for capital to really benefit from that torque that can come to the junior explorers in the uranium space. And we continue to put one good foot in front of the other, and obviously, the significant re-rate that can come on a discovery. But even until we get to that point, I think we've done a tremendous amount of work and have a land package that can create a tremendous amount of value. And we've really advanced that a lot in the last year and a half. So we've done, a lot of the hard work, but necessary work that needs to get done. And honestly, now we're in the exciting time. We're in the areas now where we know where we want to drill. And we think the probability of having that drilling success for a discovery hole just continues to grow. So an incredibly exciting time for the company, and couldn't be happier with, the space that we're in and the progress that we've been able to make. And again, follow along by signing up on our website. And thank you, Jesse, for being able to post all that here. And Twitter as well. We try and stay active on Twitter and be able to put a little bit more media there as well. So you just get to see what we're doing, because that's what we want to do. We think we're doing incredibly great work. and just keeping our investors informed of that work is a key job for us. So stay tuned.
Excellent. And as I said, link to website and Twitter as well will be in the description. Thank you once again, Drew, for coming on and sharing your knowledge with the audience.
Jesse, thanks for having me on. Anytime.
Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.